All right, welcome back again to Invest in You, and here's where we last left off. So the lesson now will be a real case study. We're going to analyze the stock. In this case, I mentioned prior that I'm going to go over Tesla's details. So that's what we're going to do today. But before I dive in with any further details, this is not a financial advising session. You always have to do the due diligence. You have to do your own research and figure out what stock is going to work best for you. This video is solely for the purpose of informing you what to do and how to go about the research, what tools you can leverage, where you can go. This is by all means not a financial advising, because whatever stock works for me or for investing you might not be the right stock for you to invest in. So always do your due diligence. Don't be biased by my opinion or someone else's. Always pick what's best for you and to the best of your knowledge. Now, without further ado, let's get started. All right, so now we're gonna go, so what I did here was I pulled out the links that I listed in my prior videos. So if you were to start from scratch and you don't know exactly where to go, you can actually do a quick search of the companies by different exchange and listings. So in this case, you have the S&P 500, and you can see a bunch of the companies that are actually listed in here. You can see Apple, Microsoft, Amazon, and so on, Nvidia, and all of these different stocks. You can see Netflix. If you were to go by the Dow Jones, then you see companies like 3M. You can see American Express. Let me just expand the screen a little bit more for you. Coca-Cola, Disney, Goldman Sachs, and so on. Tesla, it's listed under NASDAQ, so that's how we're gonna go straight to Tesla. And you're gonna click here on the link of Tesla, and voila, you're gonna get all sorts of information, anything that's related to summary, news, profile, or earnings, and so on. So you're gonna have the key stats, the 52-week high, market cap, etc., etc. Now, if you were to leverage the icon on your phone, let me go ahead and pull that up right now so I can show it to you. Okay, so this is how the phone stock icon is going to look like if you have an iPhone. So you're going to go into stock. In my case, I already have Tesla listed in here, but if you don't, you can actually go to the bottom where the three dots and the lines are, and then you can actually use the plus sign and add Tesla as one of the stocks that you want to look after. And so starting off, you're going to see the news, anything that's related to Tesla, the company itself. You're going to see Panasonic enters its AC solar panel. Probably the reason why the news is here is because it might impact Tesla and then in the direct way. News about Elon Musk, Tesla delays, tax credit concerns, and so on. What to expect from Tesla in 2018. So all of this stuff you need to be aware of. And then if you scroll to the right, then you're going to see the historic chart. You can actually play it by day, play it by week. You can play it by year, 2 years history. So you can see the stock is actually quite volatile, but overall it does have an upward trend, at least for now. So hey, it might be one of those stocks that is worth investing for you and for the long run, right? Maybe not for the short term. And then key stats, just like you will see in CNBC, the screen that I showed you before. You're going to see the open price, high, low, the market cap. Market cap means how many stocks are actually running out there and available for you to trade and what the worth is in comparison to the rest of the market. And that's basically it for the stock icon. Now, going back to the other tools that I mentioned, you have other platforms like Finance, Yahoo.com. So we're going to come in here and we're going to do a quick search on Tesla. And in the meantime, I'm going to go ahead and also do a quick comparison with Finance, Yahoo, so that way you can see how each of the platforms look like, and you get to pick which one works best for you. Like I mentioned, I actually like Yahoo a lot better because of the following reasons. So you can actually make the chart more interactive. As you can see, once I start moving the arrows and touching each pricing point, you can see how the prices change and they update, which is something that you don't get to do with Google. At least not here. Even when I zoom in, you see it's pretty static. It might work for some people, but definitely not work for me. On the right, on GoogleFinance, you're going to see the news, anything that's related. Oh, sorry. I realized I didn't have it under Tesla, so I'm just going to Google Tesla. So you got the chart, same thing. It's not interactive, doesn't upgrade, and it doesn't run as nicely as it does with Tesla here and Yahoo. You have the news. If you want to find out more about the news, all of the news are actually related to the company in here. What I like about Finance Yahoo is that it actually gives you the earnings, the quarter earnings right up front under the summary page. So you're going to see the actual versus estimate. Keep in mind that usually the price have the tendency to be quite volatile around the earnings announcement. Sometimes certain stocks might go up in price prior to quarter earnings because of the hype. Maybe people have a lot of high expectations of the company, and people might think that the price is going to go up, so you want to invest more before it goes up even further. But then if for whatever reason the actual price that they announced turns out to be lower, then you're going to actually see the price of certain of the stock actually drop. But that's more of a technical analysis. I'm going to cover that further in another video. But for today, it's just basically how to search the news, what actually impacts the company. So then you see here an announcement: Elon Musk, Roadster, and Starman in space actually recently announced that they're going to create a Tesla that's going to be able to take you out to the space. I don't know how much further details about that, but that's something that's definitely worth looking into. Same thing with GoogleFinance. You have the news listed on the right, major events that can impact the company, and then their competitors, right? So you have the prices of the stock of Tesla, then you have Daimler, Ford, GM, Renault, Toyota. So you get to actually see how the rest of the market does in comparison to the stock itself. So yeah, again, it seems like it's performing in a positive, which is a good thing. But then overall, you want to check out the price throughout the day, the months, or even throughout the year, and see whether it's having an upward trend or a downward trend in this case. Like for example with Ford. So Tesla, it's on the positive, it continues to grow. Same thing with Daimler. Not so good for Ford, or let me see what other company. Ford, basically. With Finance Yahoo, you sort of kind of like get the same. What I like about this is that they do a thorough analysis and they provide recommendations. Again, always do your research, but it's actually good to have this as a benchmark of work done by professionals who dedicate their time to actually study the stock, put everything together, the facts, the numbers, the news, and then provide some sort of recommendation. Out of a scale from 1 to 5, Yahoo Finance actually has a recommendation of 2.9 to sell, which is kind of like right in the middle. That would be up to you whether you want to hold if you already own stocks, or if you want to buy more because you believe or your research has shown that the price might go up even further, or if you want to sell because you just simply have no faith in the company whatsoever. Google actually doesn't provide you that kind of stuff, which is why, again, in my opinion, like I much prefer to play around or to leverage Yahoo Finance as a tool as opposed to Google. Look at this. Like, this is like very, very boring to look at. Google is great for some other things, but I'm not too much a fan for Google to use as a finance tool. Now, next will be seekingalpha.com. So you have Seeking Alpha. Let's say you want to learn about Tesla. So this is the site. Again, there's also an application that you can download in your phone and do the same thing. A monitor, you add that as part of your portfolio of stocks to monitor on a daily basis, and they're going to send you daily notifications. Sorry. Now, going on to Tesla, you got Tesla Motors here. And you're gonna get analysis, review, same thing. You also get the chart. You can change it to 10 years, 5 years, 1 year. The analysis done by people. So as you can see, you have Bill Cunningham, Inner Tuition, different people who have a better interest in Tesla itself, whether they're professionals or individual investors like you and me. And they also provide you with links to multiple news sources that you can actually leverage here, all in a one-stop shop. So I like the fact that you get the professional component out of this, and you also get the individual, more of like the average Joe kind of person who went out of their way and just did the research. That way you get a little bit of everyone's opinion, and hopefully that will be able to help you form your own and make as much as an unbiased decision as possible, because as I mentioned before, you do not want emotions to get in the way when it comes to investing, because it's going to cloud your judgment. Same thing, they have different tabs. You can go into earnings, stock talks, right? Different conversations. You can actually get involved and be a part of it and see what they say, credit ratings, running out of excuses, yada yada. So you're gonna get a little bit of everything in these blogs, but it's actually good, again, for you to gain additional knowledge or insight and just to see what people out there are saying regarding the company that you're interested in investing. Now, the next one will be Vanguard. So again, for Vanguard and for Charles Schwab in this case, you're gonna need a I think this is the one. Let's just try to center login. So for Vanguard, you're gonna have to have some kind of like a minimum in your portfolio. For Vanguard, it's at least $1,000. For Charles Schwab, I actually don't know. I recently opened up my account as a test just to see what tools they have out there. But it's a nice to have. So let me just walk you through with it. So this is my portfolio. It is actually quite small now because I'm not investing as heavily. I actually had to take some cash out last year just to take care of some personal surprises that I got along the way, but I'm ready to get back on it and invest again. But here is Tesla. Same thing, you have the overview and the different charts that are listed in every single one of the tools that I show you. They also have projections that they do in terms of prices. So for example, for Tesla here, you're going to see that they expect Tesla to perform positively within a week, but within a month there might be some setbacks. But then overall, the stock is actually set up to gain an 805.75% growth. So something for you to consider, analyze the numbers. Same thing, they give you the analyst rating just like Yahoo Finance does. As you can see, again, they give you the strong buy, the hold. Vanguard, that's exactly the same thing. 5 of them are recommending you to strongly buy. 7 are recommending you to hold. And again, they're giving you a comparison with other related securities that are out there in the market, and then top news. And one of the things that I believe personally that is priceless about having this, if you do have an account with Vanguard, or if you can actually afford it, is the fact that they provide you access with professional reports done by companies. So these 2 reports are actually, one is done by Argus and the other one is by Market Grader, and they will typically give you 2 points of comparison. So they'll give you a report that will give you the recommendation to buy and another one to sell, and that way you can actually do a quick search, a comparison, and make an informed decision as to see where you stand, because you always want to know both sides of the stories. You don't always want to hear just the positive, because that should actually raise a red flag. You might start wondering, okay, so if nothing is wrong with the company, then what really is the catch? There's got to be some drawback. There's got to be something that you need to be aware of. So that's why they actually do this. So they highlight both sides of the spectrums here, for you to gain additional knowledge into what's going on in the company. None of this is insider trading information. They're actually doing the research with publicly available information. You can definitely do this on your own. You don't actually have to have an account with Vanguard and spend money that you don't have to invest. But if you can afford it, this is going to save you a lot of time. And let me just quickly show you why. So just clicking into the report, let me just zoom this in for a little bit more. You're going to see a quick summary and the notes. Why this analyst think is actually Bill Selesky is his name. Why does Bill think Tesla is worth your money? It's worth a good buy. The investment thesis, they have a price target of 444. I mean, if it's a 444 and Tesla is currently priced at 335, that means the stock is underpriced, which definitely makes sense as to why this person believes is actually a good investment for you to go in and buy. The beta, it's of 1.52. Basically, what that means, if you have a beta of over 1, that means the stock is highly volatile, and if you have a beta under 1, then that means it's less volatile. Depends on how you feel in terms of risk. Like, can you ride the ups and downs of each of the stock price changes? If that's okay with you, then yeah, this is a stock for you. But if you're the kind of person that as soon as you see something going in red, you're losing, your momentum, and you're about to have a panic attack, then you might want to pick a stock that is less volatile. Scrolling down to this report, you continue to see the developments. Now this person is talking about what Tesla has up in the pipeline, what do they have coming up, the analysis. So this is what they call the technical analysis. I'm going to do another video that's going to go more in depth into this, but again, they're providing you, Vanguard is providing you with a report that has all of the work done, the big chunk of the research work done for you. So it's definitely going to help you save a lot of time if you are crushing for time. And then the earnings and the growth analysis, the industry analysis, what is it they think, what's going to impact, the risk, the company description, the valuation, and stuff like that. And then if we want to go on the contrary side, then we have my market grader, who's actually suggesting you to sell. It's actually not a good stock to hold, and here they're going to explain you why. So they do the reporting a little bit different. So they divide their research on 4 different quadrants. You have growth, profitability, value, cash flow, and then of course they do the analysis on the pricing, and then they give each of the components of the quadrants a grading, and what does each of those grading means, and the rationale as to why they think that grading was granted to that stock, in this case Tesla. They talk about the profiling, their debt, the operating margin, some of the projections, what they think it's going to happen in the company and in the sector, or how they feel about it and stuff like that. But again, doesn't mean either one of them is right or wrong. It's just how they did the research, and at the end of the day, we don't know what's going to happen tomorrow. Assuming everything is equal, this is what their predictions is. Remember, every report, every analysis, every piece of news, every piece of documentary that they do regarding a stock is based on publicly available information. They're supposed to be. Now, moving on to Charles Schwab as a tool, let me just scroll through here and show you what this is. So I was playing around with Charles Schwab the other day, and they do have a much wider availability when it comes to tools. They have more tools for you to actually go through and do your research. So we have Tesla. Again, same thing as Vanguard and the other companies. You have the summary, the chart with the news, and every headline that's out there for you to access. But where Charles Schwab is actually giving you their value is that they actually give you more reports to look into. Maybe a little bit tedious, but they're giving you more information. You actually have more to use, either to your advantage or disadvantage. I will say to your advantage, because you're going to know more about the company, and that will help you make even a much better and stronger decision. So you have other reports like the ones that Charles Schwab does on its own, and here's a little description of what each of the report is about. So you have Charles Schwab equity ratings, and they provide rationale behind their ratings with details on what factors and components. You have reports like Morningstar, and where they do analysis on 1,600 stocks quickly to get to the bottom of what stock is worth and what investments you should consider. They also have Argus, which is what Vanguard provided, and CFRA. You have Thomson Reuters, and you have Vickers. So for the sake of keeping this video short, I'm not going to go through every single one of them, but I did like what I saw in Morningstar before even creating this video, so this is something I wanted to share with you. Morningstar is actually more of an unbiased report, I found. They give you the pros and cons of the companies, the plus and minuses. They try to cover both sides of the spectrums, just to keep you well informed. Both say, when someone's saying that the market is bull, is because it's being overly optimistic, and when the market is on the bear side, it means it's being pessimistic and it's not performing very well. So they give you like the pros and the ones who are against the stock, valuation, you name it, right? The risk, every single little thing that you have to consider. This report is actually quite long. If I'm not mistaken, how many pages? It's a total of 14 pages versus the 2-3 pages that we saw in the other reports. But it's definitely something that is worth considering if you have a larger portfolio, if you're willing to invest more money and to your portfolio. Maybe you're a little bit more savvy at this point and you're not starting, then consider investing in one of these tools, because it will definitely save you a lot of time. But if not, you don't have to. Let's say you do have the money but you just enjoy doing the research, then go ahead and leverage the platforms that are publicly available out there without any cost. Again, you can use your desktop, or you can download the application to your phone and just use either one of them. And that's all I have for today. Next, I'm actually going to talk about the different platforms that you can use to trade. Of course, I'm going to consider platforms that are going to charge fees, the free ones, and so on. So until then, stay tuned, and thank you for watching.